Cool. Let's go. Hello, everyone. Welcome to the last session of the event. With me, I've got Kain Warwick, founder of Synthetix. Kain, I'll have a go describing this because you've probably done it a million times, and you can correct me and tell me where I've gone wrong. So Synthetix is one of the original DeFi projects and is considered blue chip as far as DeFi projects go. It's an Ethereum-based protocol that lets people issue synthetic assets called synths that track the price of other things, on-chain and off-chain assets. So gold, silver, cryptocurrencies, fiat currencies, indices, baskets, whatever you want. These synths are financial derivatives, and they're designed to trade in line with the price of the underlying. They're backed not by the underlying, so they're not backed by and redeemable for the actual underlying thing, but they're backed by SNX tokens at an over-collateralized ratio. So, for example, to mint $1 worth of gold synths, you need to back it with $4 worth of SNX. So, how's that?
Yeah, that was good. That was a very good intro. Now, I'll bring you along for my next presentation.
So, can you update us with some numbers? So, I basically just took that off the website. But can you update us with some numbers and progress and talk about the ultimate goals and vision?
Yeah, so at the moment, I think there's around $500 million worth of assets, different synthetic assets that are trading, and the trading volume on a daily basis is somewhere between $50 and $100 million a day. So we're starting to see some interest. A lot of the interest is still very focused on crypto assets. There's a little bit of interest on things like the euro. And obviously, US dollars are pretty prevalent as well. But I think the big transition for us is moving away from layer one Ethereum to optimistic Ethereum, which will allow for much higher throughput and lower latency trading.
So everyone's going to layer twos, right? Why did you pick Optimism? Why did you pick optimistic rather than any of the other layer two solutions, the ZK solutions, or Matic, or even pick another blockchain to do it on? That's better, faster.
Yeah. It's a good question. We've worked closely with the Optimism team for over a year now, and I think when you kind of weigh up all of the different trade-offs of different solutions, security, speed, ease of kind of porting the code across, that the optimistic rollups right now, for me, are the winners. Now, there's obviously a number of different optimistic roll-up solutions out there. We chose Optimism in particular because, again, we were close to the team, and we've been working really hard to kind of get it to production ready. So I think we've been live now for staking for the last 4 or 5 months, and trading is about to go live later this month.
Awesome, good. And just for people who haven't use Synthetix, but maybe they've heard about it a lot. What's the mechanism to help the price of a synth, whether it's a synth or an inverse synth, to stay in line with the underlying asset?
It's basically an arbitrage process. Okay. So you can't directly redeem the asset, but for example, there's several $100 million worth of various synths in Curve, as well as Uniswap. And another, a bunch of other AMMs as well. And so, if the price kind of deviates too far off the peg, people are able to come in and arbitrage the deviation.
Interesting. So they're arbitraging it even though there's no kind of end in sight. So it's not like a future or a perpetual future. So it's not like a term future where when that future finishes, it's going to settle at the actual price of the underlying.
Yeah, correct. Yeah.
Okay. So it's based on the belief that the next person will also think that it should be in line.
And obviously that it's over collateralized. As you mentioned, there's 4 times the amount of assets backing each synth as the total synth supply, or ideally more, but 4 is the minimum.
Yeah. Got it. Cool. And you yourself, you founded it, you left, and then you came back. So can you spend a couple of minutes talking about why you left? I think if anyone's come across your blog post, it's to do with burnout. But would you like to share a little bit about why you left and what made you come back?
Yeah, so it was obviously there were a bunch of different things going on there. One was definitely the burnout. It had been a long 4 years of running the project. Another one was the governance transition that has been in place since mid 2020. So originally we were an open source software foundation. And we transitioned from that into a DAO. There were multiple DAOs, and as we got into earlier this year, it kind of made sense for me to step back from kind of day-to-day decision making. We had a process in place where there was a council that was making decisions about the project. In terms of why I came back, I came back and joined that council. So I wanted a kind of legitimate position within the project to be able to kind of help to steer certain things. I think the governance was not quite done yet. It's obviously a kind of iterative experiment that we're running in terms of decentralized governance. So there were still some things that needed to be tweaked.
And this is the Spartan Council, right?
Correct. Yeah, that's the Spartan Council.
Okay, and how does your current role there differ from your previous role as CEO and founder?
Yeah, I mean, previously I was kind of the person running the foundation, I guess, and now there is no foundation. So I'm one of 8 people on the council. Obviously I work closely and know a lot of the core contributors very well. So it's kind of a coordination role more than a decision-making role or control role. It's just kind of helping to make sure that the prioritization is working the way we want it to be.
Got it. And does that how does that make you feel in terms of the pressures on you?
I mean, it's different, obviously, because it's not ultimately my decision anymore. I can't say what we should do. It's something that I kind of need to be an advocate for a particular process or direction or strategy. I think it makes me feel very happy, obviously, because this idea of decentralized governance is something that we've been talking about since 2017. And so the fact that we're still, we're kind of seeing that being realized is pretty amazing.
Yeah, and Synthetix is definitely one of the leaders in this kind of navigating the process of decentralization and not really exit to community, but decentralization of decision making. So with that in mind, so currently, can you talk a little bit about the DAO structure and exactly, maybe give the audience some examples of things that SNX holders might vote on, and things that they can't vote on as well.
Yeah, so basically it's a sort of representative democracy, right? So the SNX holders directly vote for council members on various councils. So we've got a grants DAO. We've got the Spartan Council, we've got ambassadors who go out and kind of interface with other projects. And that then, that delegation, to the council then makes decisions about parameters, about new SIPs, which are like our improvement proposals. So a big one coming up is this transition to optimistic Ethereum. There are a number of kind of components to that transition. It needs to be sequenced correctly, and the Spartan Council will decide that. And so I'm, one of 8 votes on that council.
Got it. So these SNX holders aren't, so it's different to Aave. I interviewed Stani earlier today.
Yeah.
So on Aave holders vote directly on things like should they increase certain ratios or limits, or should they add new tokens and liquidity pools. Here you're saying people, SNX holders don't vote directly on these matters. They just vote people in. Like they vote on committee members effectively and it's the committee members that do whatever they want to do. And obviously if they start doing bad things, then they'll get voted out next election.
Yeah. So not just will they get voted out, but there's also a direct mechanism for, let's say, for example, I had voted you in, and then you made a decision that I didn't agree with as a token holder. I can actually remove some of your voting power. I can kind of dilute your voting power. And this has actually happened in the past. So we've had some contentious decisions, one of which was about a month ago, to lower the collateralization ratio from 4.5 to 1 to 4 to 1. And there were a few people on the council who disagreed with it. And one of the council members who voted for that change was actually diluted. And so the measure didn't pass, and it was then re-voted on later.
Did they get diluted after they voted, or diluted before they voted?
After they voted. No,
oh, wow.
Voted.
So they can vote, and then the people who delegated kind of power to them can say, oh, I didn't like that vote, and in retrospect, I'm going to make that vote less powerful.
Exactly. And it was sufficient to remove to block the proposal, essentially.
Got it. So these committee members really have to work. They can't rug their supporters, right? They if it can be done in retrospect, right?
Exactly.
It's different to political parties in traditional geopolitics, where you vote in some party and then they can go back on their word, or they can do things which you wouldn't really necessarily agree with, and you can't unvote them.
Exactly. Yeah. So it's a much more dynamic system, and because Synthetix requires stakers to participate on a weekly basis in order to claim and manage their ratio and do all the things that they need to do. We have a fairly active community, so people are watching these proposals and participating fairly actively.
Got it. Are there any other projects which you think are as progressed as you are on this journey?
I think there's a few that are have different dimensions on which they're further along. I think Maker, for example, in their risk management is probably the most advanced in the space. I think Compound does a really good job with risk management. I think Aave does a very good job with including their token holders in kind of the ensuring of the protocol and protecting users. That's a very active role that they play in governance. But across every dimension, I would say maybe herein is kind of as advanced as us. They have a slightly different model, but certainly Synthetix is one of the most decentralized protocols in terms of governance. Today.
So definitely, if people are interested in DAOs and governance, they should hop into your Discord and start lurking there to see what's going on.
We talk about it all day.
I'm sure. Okay, so changing tacks now. A couple of days ago, Gary Gensler, chair of the US SEC, made a comment at a speech to some lawyers to the American Bar Association. And he says, make no mistake, it doesn't matter whether it's a stock token, a stable value token backed by securities, or any other virtual product that provides synthetic exposure to underlying securities. These platforms, whether in the decentralized or centralized finance space, are implicated by the securities laws and must work within our securities regime. So I read this and I felt like he's rugged the whole industry here. What do you think, as someone who founded and works for one of the, it's literally called Synthetix, so one of the biggest decentralized projects in the space that's aiming to provide synthetic exposure?
I think my perspective when I saw those comments was that the primary concern is probably the stablecoin industry, and particularly what's backing stablecoins. So if you look at a lot of the regulated stablecoins, or obviously Tether is kind of in this regulatory gray area, but there's things like TrueUSD, USDC. The initial proposal from those stablecoins was that there were going to be dollars in a bank that were going to be backing stablecoins one-to-one.
Yeah.
Right? Which I think everyone was very, pleased by after the Tether FUD that we've been dealing with for a long time. Yeah. What we've sort of seen though is that over time that value prop has maybe been watered down a little bit. And it's gone from, these are dollars in a bank to now maybe there's some other financial instruments, maybe there's some, debt there, there's money market funds. And I think personally, as a user of USDC, my strong preference would be that I want to see, actual dollars in a bank. Like the value prop to me is not, how can they maximize the yield on the assets that are backing the token. It's like, I want that token to be directly backed. And so from like a user risk perspective, especially when you're talking, tens of billions of dollars, it doesn't sit well with me that there's a lot of leeway to kind of invest those assets, the underlying assets, in a bunch of different instruments. My sense is that that's the primary concern. Obviously the TradFi regulatory infrastructure needs to come to terms with DeFi, as it did with Ethereum, kind of 4 years ago, and I think it will. I think there will be some kind of reconciliation and an adjustment of expectations. But I think those comments, in my mind, that what came to my mind immediately was kind of Tether and USDC.
Got it. That makes sense, given all the other noise around central bank digital, like our regulators and central banks trying to pave the way for central bank digital currencies and push aside the experiments going on in the decentralized world. But if a regulator did decide that they wanted to kill the project, do you think you're at a stage where it's unstoppable? Or are there still certain points of weakness? And if there are, when does it become an unstoppable financial service, I guess?
I think probably the best example of an unstoppable service is probably Uniswap, right? Uniswap doesn't rely on any external components. There's no oracles, there's no, even the front ends are obviously running on IPFS. So in my mind, that's kind of the idealized state that everyone wants to get to. But most projects are not like Uniswap. They're kind of working towards different features and upgrades and things like that. So I think, there's obviously some concern that a regulator could prevent a project from continuing to develop the software. But the software that is running on Ethereum is kind of by definition unstoppable. It's there, like you can't take it off Ethereum. And I think regulators have come to terms with the fact that Ethereum itself is unstoppable. So, the software that's running on Ethereum today is unstoppable. It's more a question of what does the future look like, in my mind.
Got it. And speaking of what is the future, then what you I think the last blog post was talking about the Hopium plan. Yeah. So what does the future of Synthetix look like?
So, like Uniswap, I think we've identified a bunch of different aspects of the protocol that are not optimal, and could be implemented much more efficiently. And so, there's a plan to implement Synthetix v3, which will be completely redesigned and re-implemented from the ground up, and a new set of contracts. Obviously, since we started building those contracts back in 2017, the space has moved very far. And so, we kind of want a clean slate that we can start building from. And then those contracts will obviously be deployed, probably early next year. And that will be the kind of base layer protocol that we'll start integrating and implementing, moving forward.
And will that be done on main chain, or would that be done on Optimism?
It'll be done on both. It'll be kind of a cross-chain protocol, which is the expectation even for the current version. It will be cross-chain, but yeah, the V3 will be deployed natively on Optimism as well as L1.
Got it. And existing SNX holders, you're not going to issue a new coin. They'll just migrate their SNX to perhaps a new version of SNX.
Exactly. Yeah, it'll be like a kind of opt-in migration process to migrate from the old version to the new version.
Got it. And what will that let people do that they can't do today, or do much, much better than they can do today?
I think the
benefits to the users, I guess.
Yeah, there's a ton of things. I think for stakers, it's probably more aimed at the people who are providing the collateral in the network. For traders, there'll be new functionality like limit orders. It'll be a much more efficient and much cheaper system to use on both L1 and Optimism. So a lot of efficiency gains from some of the research that's kind of come out of the last few years. For stakers, it's going to improve a number of things. It's going to make the the network more efficient in terms of the collateral ratios. It's going to allow us to, kind of reduce the kind of capital needs, I think, over time. At the moment, it's 4-to-1. Ideally, we'd like to get something, close to what Maker and some of the other, money market protocols have, where it's 150% to 1, something like that. There's a range of different improvements that we're expecting to roll out.
Got it. And the same thing. What happens? I guess if you're reducing that collateralization ratio, which yours is, I don't know of any others in the industry that's highest. So I'd say it out of the ones that I'm aware of,
it's the highest.
It is the highest.
Yeah, definitely. Yeah.
So as you bring that down, and then there's a good reason why it's high, because you're trying to reduce certain types of risk. As you bring that down, you get closer to liquidation thresholds, right? Where either the value of SNX falls, like the absolute value against the US dollar falls to a certain threshold, or the value of the asset that's being synthed rises, such that you've got an imbalance there, and you start breaching thresholds. Can you talk a little bit about what are those scenarios and how might what are the protections and what happens in these cases?
Yeah, so at the moment, the liquidation process is very similar to other protocols. So, a liquidation bot, typically, they're bots that are running on mainnet, will pay down the debt of the liquidated account, and then turn around and sell down the assets, on the open market through an AMM or somewhere else. And so what we're planning to do, one of the changes to this liquidation process, is to actually have like a sort of socialized liquidation process. So we will create additional debt that will be socialized across the rest of the protocol, and then the underlying collateral will be distributed to the stakers. So rather than creating, this potential for like a downward spiral where, there's a bunch of the collateral that's auctioned off in real time, which obviously puts price pressure. Yeah. If there is an account that is under collateralized, it'll essentially be reabsorbed by the rest of the network.
And does that take you closer to the Aave way of doing this, or is it closer to the Maker way of doing this?
It's different to both, because in both cases the debt is kind of siloed to an individual account. In our case, we've got this global debt pool, so we have the ability to kind of socialize the liquidations.
And is that socialized across across users for one particular synth, or is that across all synths?
All synths. So yeah, that's the entire debt pool. Yeah.
Right. Yeah. Okay, so changing tax. We've this conference is aimed at institutional investors as well as for individuals. How much interest have you seen from institutional users, and in what part of the Synthetix protocol are they interested in, and what's stopping them from being more interested? What are the challenges to get to onboard more?
I think the primary value prop for someone who's using Synthetix today is large value trades. Things the equivalent of trades that would go through Curve, for example. Large block trades in BTC, ETH, USD, Euro, etc. And so what we're seeing is that the average trade size is in kind of the millions of dollars range, and part of that is the cost of transacting on L1. It's L1 trading costs are quite high. Just the gas costs themselves. So obviously on Optimism, those transaction costs will be much lower, which will allow smaller trades to be kind of viable. But at the moment, again, the primary value prop is very large block trades. We often see, 10, 20, $30 million trades made in various assets.
Okay, and do you have a pathway or a strategy for more instos, or do you just not care who the users are? It's like whoever meets these, I don't care whether you're a person or a company or a fund or this or that. If you just like, here's a service we provide, like if you want it, use it. What's your mentality in terms of how you think about your customers?
We essentially treat it as a protocol. It's kind of this underlying primitive that exists on chain. A lot of the transactions go through things like Curve, 1inch, and various other kind of aggregators and other AMMs. So we obviously do have our own front end, which is Quenta, which is a separate team that operates that front end interface. But the protocol itself, we sort of see, as something that I think anyone can kind of turn up and use. Probably my expectation, if I had to guess where institutional usage will come from, will be kind of CeDeFi, centralized DeFi wrappers, if you will, or interfaces. So exchanges and other, kind of centralized services that are offering these trades because they're more efficient and lower slippage and better fills.
Got it. And is it Ethereum all the way? Ethereum and its layers, or what are the team? What are your thoughts on? What are the team's thoughts on other layer ones? Whether that's kind of Solana or Polkadot or Definity, these new generation layer ones.
Obviously, I've been involved in a number of debates, with SBF and some of the multi-coin guys, Kyle, about this kind of trade-off between Ethereum and Solana and some of the other blockchains. My personal view is that, Ethereum, obviously being the most decentralized smart contract platform and most robust from a developer tooling perspective, is likely to win out. But, it is a set of trade-offs. So, Ethereum L1 is obviously slower than some of these other L1s that are out there. Obviously the transition to optimistic rollups will significantly improve that situation, and then obviously the merge and the transition to E2 will improve it even further. And obviously there's a lot of other research that's coming online as well that will kind of bridge that gap. But I think the critical thing is obviously the security profile of Ethereum.
Got it. Cool. So that's let's give some people some time back. I've come to the end of what I prepared. Do you have any messages to the community? Like, what do you want from people listening in? What do you need? Is there anything you want to ask them or tell them to do?
I mean, again, I think starting to if you haven't already, starting to kind of test out what these optimistic rollups look like. Obviously over the last 6 months, there's been a lot of interest in other chains like, Binance Smart Chain and Solana and even some of the other kind of side chains, I guess, on Ethereum like Polygon. So if you haven't taken the time to test out these optimistic rollups, they are ready to go. You can go and test them out now, and I think the experience and the overall kind of profile of what these rollups look like is incredibly powerful. So it's something that you kind of have to feel. It's a visceral thing, and so I would encourage everyone to go and start testing out optimistic Ethereum.
And for people who might want to work for the team or work on the project, what's the best way for them to get involved?
Our Discord is, an open. It's an open book. You can come in. Anyone can participate. Anyone can, start to contribute, whether it's engineering or other aspects. And then, obviously, our governance process is pretty efficient about onboarding the right people to contribute to the project.
Awesome, Kain. Thank you very much indeed for your time. It's great to chat with you.
Thank you. That was great. Thanks.